Hey, what's going on, guys? Welcome to another video. So today we'll be raising this $10 account, so stay tuned. Make sure that you like the video and leave me a comment there, and then let's just get straight to business. So $10, what am I going to trade here? So earlier I've spotted something nice on jump 50, and let's just go to the daily time frame. So on the daily time frame, I've noticed something here, that we've had a double bottom there, and then we have a W formation right here. So you all know what W formations do. So this is an indication that we need to start looking for buying opportunities, but we can't just buy anywhere because we need to wait for certain retests and certain retracements. And this is a clear indication on the on the daily time frame that we're going up. But let's just visit the H4. So on the H4, I've noticed a bullish continuation trend or channel here. So meaning that the market is still continuing to push to the upside. So that right there is a retracement. So I'll just go ahead and just enter 2 positions there, because we are on a $10 account. We don't want to risk a lot here. And let's just see how things play out. So this is a bullish continuation, and the market has failed to break this zone here, or it will fail to break that zone because there hasn't been any candlestick confirmations. But because I have traded such setups before, I know that it's going to bounce from there on that specific level. Why am I so confident that it will bounce from there? Because I'm using the Fibonacci retracement tool. So from my swing low, which is here, all the way to my swing high, the market has passed the area of 61.8, which is the usual area where it should bounce. But why did it not bounce there? Because it needed to go down to touch the diagonal supporting trend line before it can push to the upside. And let me just adjust it nicely here. So this is our level here where the market gave us the bullish move to the upside. Let's just do this. So at the level of 100, that's where the market gave us the bullish move to the upside. And at the level of 0 at the top, it's the level where the market was overbought and then it had to go down. So exactly at the 61.8 level, that's where the market should reverse and start pushing to the upside. So in terms of TP, we can just put our TP at the level of 23. At the level of 23, we can just put our TP there. So let's just go to the H1. I'm just going to delete this Fibonacci, and now we have an idea of where the market will bounce off, moving to the upside. So there's going to be a new candlestick forming at around 11, so there's 10 minutes left to a new H1 candlestick. So that will give us an edge over the market. So for now, all we do is just wait, hold, and let this thing go up there. The reason why I chose the level of 23 is because it's a very strong level of resistance there. As you can see, when the market came to touch here, it dropped, made a fake out, only for it to go back, retest here, and then push to the downside again. So now we're just headed to the upside, and yeah, there isn't really much explanation needed on this one. It's just a clear setup, combination of trend lines and support and resistance levels. So let's just hold this and see how much we can make from this market here. On the previous trade, we managed to close at $16.08. So yeah, our account is still here, and right here I've got another setup on jump 75 index. So these jumps are very volatile, because yeah, very dangerous for such a small account. But I'm just going to go ahead and just enter. Let me just calculate my risk here. I'm planning on entering like 5 positions on this one, and yeah, let's just see how it all plays out. So I'm going to be entering 5 positions on this one. It's a similar setup. I'm using the Fibonacci from my swing low here all the way to my swing high. I can see that the market touched on this 61.8 area, and then it went up, but only for it to come back down, which is where it's at now. And then after it touched that level, it's just touching that level so it can gain momentum to further push to the upside. So let's go to the H1. I'm just going to delete this Fibonacci because now we have an idea of what is happening there. So yeah, at the 61.8 level, the market touched, it went up. Now it's coming for a retest, creating a W formation to further push to the upper part of the market, but it will have difficulty crossing this level here. So this is a form of a setup where the market will go up, and then after here it will continue going to the downside. So this is the kind of a setup, and then I'm just going to put 4 positions there, and our TP will just be at the top there. So yeah, this is there isn't really much explanation needed on this one. All we do is just move with the market to the upside and let it give us what we need, and then we just capitalize from it. So we're not even going to wait for it to reach the top, which is here. We're just going to be closing a bit earlier because we're trying to raise this account. So yeah, that's just how it is. And then yeah, I'm just going to add another position here. I think I'm only allowed to open 4. Okay, I've added another position, so I've got 5 positions running now. And now all we do is just hold this and then push to the upside.